Go, baby, go.
Hello, this is Dave, and welcome to Equity Story. And this is obviously just general share advice and not personal advice. And let's get going, Wolfie, because again, another sort of busy day. Now, good weekend, Wolf. We had a great weekend, really, didn't we, with the Cincinnati CTM on Saturday? Again, spent a lot of time with a lot of people, and how much fun it was.
Dave, and I'll tell you what, that crowd was bloody intelligent, wasn't it? I mean, the questions they were asking, I'm thinking, God, it started to test us out. Good.
No, it's good. Yeah, Brady Bunch, that one. A little bit scary, to be honest. Wolf, can I talk about a stock that, and one of my friends, Michael, when, we had this obviously on Einstein's as soon as it broke out, yeah, right? And a great little breakout, a good buy, and it's sort of gone on with it. And you sort of look at that and you think, can it keep going? Now, I'll bring the announcement over of Dreadnought, and they're trading on at the moment about a 350, I think, million market cap. So it's starting to get up there, but for good reason, Wolf, for good reason, and there's possibly this could go on with it. So could you give me a little bit of a fundamental overview of what's going on here at Dreadnought Resources?
Yeah, it's all about really the rare earth discovery that they had and some of the assays coming through it. And we talked about it right at the beginning, right? When we actually were alerted to this story, that's the early indications are it's going to be a pretty high discovery, probably in the top, top 10, 5% maybe globally. And this is what, you look at it, you've got the number one with Linus, and then you've got a couple around the 5-6%. And then you've got the fours, the threes and fours, this is where Dreadnought comes in. So far, and nice and thick as well, 35 meters, 31 meters, 24. I'm just referring back to some of these announcements from July. It looks excellent. Now, can they keep this going is the question for me. And how big is this going to be, right? Is this thing? So I think the answer to the question of how big this could be with more exploration, the early exploration stuff that they did with today's announcement, talking about significant growth potential, almost like a 13-kilometer corridor, right, of stuff. I mean, we don't know, obviously, what the mineralization might be. If there is going to be there, is there going to be similar grades or not to the early type stuff? But so far, it looks very promising. I have to say, I mean, discoveries like this are very, very few and far between. And generally speaking, when it gets I suppose the wet sails, it goes quite high. And when I look at it, the potential from here, it could easily get to $1 billion market cap just on the back of the potential of being a global discovery of significance.
So it could potentially three-bag from here.
Yeah, absolutely.
Wolf, can you just explain to me a little bit about Capex of rare earth companies? Because and they're slightly different in some ways, aren't they? How rare earth companies are, because I think you could just sort of take up the rare earths, the product, and then you can ship it to a factory. It can be reasonably far away to be processed. Is that correct, or does the Capex need to be, because Linus don't they deliver their product quite a distance? Yeah. Is it possible with these sort of rare earth plays to just do a deal with a?
There is, but let's start at the beginning. I mean, first of all, the processing of is actually quite complex.
Yeah.
Because it involves a number of minerals, and normally the minerals are associated with radioactive materials. Yeah. Right. So you've got the radioactivity. That's why the processing by Linus is in Malaysia, because they are sort of they've accepted the fact that we can do it safely, and they're happy with that. That's the complexity of it. That's why it costs so much to do such a thing. And like I said, because every rare earth deposit is different, combination of different minerals in concentrations. It also, some minerals in the rare earth elements are much more desirable than others, much more expensive than others. So it is not an easy place to, I suppose, get excited about unless you sort of get the hang of what they've got.
That's what I'm saying. I mean, basically with something like DRE, is it possible with Dreadnought they wouldn't even look at that. They would just basically ship the rare earths to America and
No,
just get it.
It's a very good question, Dave. I don't know how to answer the question because it just depends. Well, it's probably too early to say whether that's the case. However, like I said, I think if they were going to do it themselves, I think the capex probably would be at least north of $500 million straight away, right? Because like I said, it's a complex process.
But there's issues in Australia to do that. That's
well, exactly. The permits and stuff, from the governments, whether they can do what their concentration of, say, the radioactive materials are going to. It's just too early to say. However, from what we've seen from the others, like I think they're talking about that they are next door to Hastings, right? They've got a project already there, and they are like a $500 million company themselves, and their capex is going to be quite large. So you can imagine Dreadnought will be in a similar space. But look, Dave, if it's a great discovery, then potentially it makes it easier to develop something, right? I mean, saying that, no one's going to give you $1 billion or $500 million just like that. It's got to be really, really good.
Yeah, but the point I'm getting at, it might not be the case that they have to do that 500, 600 million raise to get the capex. They'll just get a deal. They'll just get a deal done with a manufacturer.
Yeah, I still think they have to process some part of it, right? I don't think they can just dig it up, put it on a truck, and send it somewhere. They still have to go and process through part of that through in Australia.
Okay, which would be capex, but maybe not.
Yeah, maybe exactly. I mean, if you want to enhance some of this stuff, then yes. And like I said, I mean, it's a good question. Probably if I say too much, I'm probably going to be wrong. So I'm just going to stop it there.
All right, listen, really interesting, Wolf, and
it is
an exciting process. So you've got something like DRE, and again, it's sort of moving up nicely, but it's moved up from the trend. Do you sort of have a little nibble now, and then you wait for a bit of market weakness, or how would you, as an investor, you're sort of saying this company's getting hit after hit. It's obviously looking a lot bigger than what one might think. How would you sort of,
as a greedy investor, I'd wait for a pullback. For a FOMO investor, I'd get in now, with just a little nibble in it if you haven't already got into it. But you've got to have a tight stop because expectations are it's going to fluctuate a bit, just on the market. Plus, it is a bit of FOMO in there as well. Also, remember.
And I think we sort of do believe the markets are going to come up. We're going to get some volatility. So just be patient. Maybe a tiny little bit nibble now, and then just try and buy most of it once we get a market pullback.
Yeah, so I think they talk. I mean, there's going to be a lot of drilling, right? So you're going to have a lot of information still coming out. And the one on the from this announcement that I've got in front of me, I'm just looking at it. They're looking at the initial JORC resource to be released in December quarter. So you've got about 5 to 6 months to set yourself.
Right, brilliant. Okay, absolutely fantastic. Wolf, next one on the list is ALD. EBIT of 734 million. Yep. The stock's actually holding a very, very nice trend, and I was on Einstein's as a trending stock. I think it's got a little buy signal. You think you can go on with it, Wolf, and get up to that sort of $36 mark?
Look, the numbers are pretty good, but it really depends on the oil prices, and it's just such a dependent company on the fluctuations and tribulations of oil and gas. So we'll see. So far, so good. And I think, generally speaking, we've got a positive view on oil and gas, right? Maybe you are much more bullish than I am, but I'm still positive on it. I think, coming up with the winter stuff, I think we're going to see a little bit more of a push higher, but we'll see.
Yeah. Well, definitely, Wolf. I think I am positive when you look at, you're not seeing you're seeing Ukraine getting even worse. I think they're now bombing Crimea, and you've had that obviously assassination of one of Putin's allies' daughters, which was obviously meant for his ally. You just don't see things getting any better in that war. Plus the fact, Biden, rightly or wrongly, he's renewables. He set his goal at being renewables, and it is going to keep the oil prices a little bit higher for longer. So, I think bullish of the story in a very difficult market. If you're going to have a keeper, maybe ALD, it could be one of those.
Yep.
Now CNU, Wolf, which I don't know what you described this company as once to me. Was it New Zealand's Kogan, or I can't remember now.
No, I think isn't this company like the Telstra of New Zealand?
Oh, Telstra, I can't remember, but you had a
it's not too bad. Like I say, all you do with this is trend, because it's a New Zealand-based company. Really, it's just for your trend. I just had a quick look through the results today, and they're okay. Nothing spectacular in there. I think they said they're going to be growth in the future, which is and I think they upgraded the view in FY23. That's why it's probably going to hold on quite well. So overall, it's still trendable if there's a trend there. However, it's not for me. If I'm going to play with companies like these, I want them to be in Australia.
Yeah, it's sort of just looking sideways for me at the moment, Wolf. So yeah, certainly
not for the moment, right? At least we know that at least the fundamentals support a trade if there is one there later down the track.
All right, Duratec. Tell us a little bit about this company, Wolf. I mean, the chart doesn't look too bad, right? It looks pretty respectable. Yep. I don't have a problem with it.
Yeah, bring up the results. Let's have a look through the results, so we can have a look through, and I'll show you why it's actually not too bad. And you've got a, I suppose the first page is probably the most important, which is nice. If you bring that up, and I'll talk through it. Yeah, there we go. So you've got revenues up from 235 to 310. That's a pretty good result, right? You've got EBITDA up slightly, about $1 million, which is not bad. Remember, these guys are going to be low margin. That's the nature of contractors. NPAT up 10%. Dividends, EPS 3.2. We'll work it out in a second what it's actually trading on. Actually, Dave, what's the price of Duratec at the moment? I'll quickly work it out for you on a 3.2 cent thing.
41 cents.
Okay, so let's go 0.41 divided by 0.032. It's trading on 12 times, so it's pretty cheap. Well, 13 times, sorry, 12.8 is 13. So that's pretty cheap. Cash of 58 up from 41, so that's nice. But the really most important bit, if you just go a little bit lower, is the outlook, right? Pipeline of work. So you've got an order book up from 236 to 458, tender 701 up from. So it's not bad, right? You've got a stock that maybe there's a trade in there if the charts deserves it. So overall, you look at that and you go, yeah, not bad. I'm happy to give this a shot on a trade.
Well, you can see, I mean, also you can see their margin squeeze. Their margins have obviously from 310 to 235. They've only made another 700 grand, but at the end of the day, at least they're getting more work in, right?
Correct.
So it's not too bad. And like you said, the order book's looking good, and they're looking good for growth. What sort of area do they specialize in, Wolfie?
Look, there's a little bit of crossover with JLG, a little bit, right? They've got some restoration work type stuff in there, but generally speaking, I think they are engineering more than anything else. So, yeah, look, like I said, it's tradable. It's not my cup of tea overall, because I'm really trying to find the best of the breed in its space, and JLG is probably the one I'm really going to be sticking to. But it's like I said, it's okay.
Yeah, it's not a huge market cap at 96 million.
No, that's right. That's exactly right.
All right, thanks for that, Wolf. So, good looking chart. Okay, would you
maybe wait till the end of the week with that one? Let's see where it finishes, right? And it could be an outstanding chart by the end of the week. You never know.
All right, let's have a look at NSR. National storage units are pretty. I'd say very resilient in most markets. Actually, most probably from that point of view, not a bad story. The only trouble, not a brilliant dividend though, is it? I think the dividend's just under 4%. Is that correct?
Yeah, 4%. But you know what? It's a very strong 4%. They're going. I think they're talking about that's going to be growing by 5% next year. So overall, Dave, it's a very steady as she goes type of stock. Right, it's not gonna go BHP that one year you're gonna have a 10% dividend, next year you're gonna be a 4% dividend. At least you're gonna have a 4% pretty much all the way through, because it's one of those resilient companies that continuously you can see through what the outlook, what the sort of results are going to be like.
Well, a nice stable one, isn't it? Really for the mums and dads out there.
And 4%, you could fill up gap somewhere for someone.
All right, and yeah, it did have its nice run, didn't it? I think we were pretty keen on this one when
Yeah,
it was
I think,
down.
you know what, I think this one's more growth than dividend. I'm actually thinking the way you're going to be playing this is if they've come up with more growth, that's when you buy it. Not for the dividend. The dividend is actually a nice bonus of 4%, but I think if they can maybe make an acquisition or two and grow that way, that's how you probably play this.
They do. They have got some growth, haven't they? They're
Mm.
they are growing. So
Yeah, you just got
something.
to catch them on a tear, right? When they really make a couple of really interesting large acquisitions.
All right. Next off the list is 88 Ordinate. Again, they've done very, very well recently, Wolf. They've had a tremendous retest of that $10.
Yep.
Technically, I think it's a sell. Maybe now it's just looking sideways. But talk to us about the fundamentals, the announcement.
It's just too expensive there. I mean, it's just simple as that. On a market that's really focuses on value and not paying too much, come up with what, 33 million revenues. I think that's the US. So let's annualize it. You're looking at, let's say 33, about 45, I think, million Aussie on a market cap of 700 million. That's way over 10 times just on revenue wise, right? That's way too much, I think, for me. And I know it's EBITDA positive, but it's still unprofitable. So, you don't want to overpay for this. And I think overshot on the maybe on the bottom side and overshot on the top side, I think is probably worth about between 7 and 8.
All right.
But it's just too expensive.
So you're really agreeing with the technicals there, Wolf. Just stay away.
Yeah, for the moment.
BSE, Wolf.
Yes.
Could you just check this on your expensive little Reuters? But I've got a P of around 10, and I've got a dividend yield of 20. Is that correct?
Well, Dave, let's put it up. Give me the results. Show me their results so everyone can see, and we will just work it out very quickly to see where they're at. Right. I had a look at the results, and the reason why it caught my eye is that it is a really one of those that's flying under the radar. We know everyone's getting excited about the Luca and some of the other players in this field, but they are quietly accumulating some nice numbers. It is risky in Africa. I've got an EBITDA of 158 million bucks, which is nice. And determined the results have allowed the board to deliver a final dividend of 3 cents per share. Now, does that mean it's going to be 21%? What's the open at 33 cents? So at the very least, it's about 10% yield, Dave, and on a 3 cent dividend, you've got a 10% yield.
Is not bad. And they do it twice a year, though. Is that correct?
No, I think this is a full year result. So I think this is talking about the whole. I don't think they paid that. Did they pay a interim dividend? Let's have a look.
They did last. They have done the last 2 years.
Yeah, but did they pay interim dividends? Can you go down?
Oh yes, they did on the 11th of March. They paid 3 cents.
11th of March. Okay, well there you go. That's 6 then. That's almost 20% then. There you go. That's true. If it's 6 cents, then you're looking at about on a 33 cent value. Then you're looking at about 20%. That's incredible.
Okay,
that's incredible. I mean, the question is, can they keep it up?
Well, I think you sort of.
It is unfranked though, so that's the other thing you got to take into consideration. So it's not the gross stuff. This is actually that's it. You're not going to get extra franking out of it.
Yeah, well, I think you sort of go into these things thinking, well, that was a good dividend last year, but wouldn't it be great if we could just have that 10%?
Yeah, exactly. Yeah. Dave, after 10%, I'll be selling an Atlee for that.
All right, so all very, very good. A nice little story. So, what would you classify this as? Under the radar, possibly
under the radar, high risk.
Dividend play.
But you know what? If you can get 12, 24 months out of this at these sort of type prices and the dividend yield, you're almost going to pay for the actual company, which is dividends in like 3 years. It's crazy.
Nimaps, very surprising. Wolf just had a higher offer.
Yeah. So
a little bit surprised with that, but okay, good. If
good on.
Good on. Yeah. SSG, the shaver shop. I think this is it's going to struggle to get much higher. It has had a run. But again, Wolf, P of 9, dividend of 7.85%. I think that you're saying their results were slightly under, the revenue or profits were slightly below.
Yeah, I look, it was a mixed result. So you had up higher revenue, but it wasn't they only grew by single digits, right? It wasn't outstanding. However, for a retailer, maybe in this market, that's pretty good. I mean, that's the thing. We got to think into the bigger context is how are the retailers going? How is the sector going themselves? And it is pretty tough. And some are going better than others. I mean, I'll give you an example in a second. You'll see the difference.
Sorry.
Well,
I love that photo of the I think I would actually buy a razor if I could get her to shave my face.
that is
when does that, if my wife did that, you see that bit of the neck there?
Yes.
That would be cut very hard. Like,
and it wouldn't be an accident either, Dave, would it?
No, it wouldn't be an accident. I would know where I'd trust my wife with a razor blade near my throat. I think it'd be by Dave. But I like to think she loves you.
Just look at it. I mean, you've got NPAT has gone down slightly, like I said. So it's not a brilliant result. However, in a scheme of things, not bad. EPS has gone down slightly as well. So overall, I think you're right. I mean, the chart is probably now taking profits type stuff.
All right, a chart, but maybe it's a dividend play, especially if you could get if your wife is low like that and shaves your face with such loving care. I could argue the case you'd hold it.
You could. I mean, but if you're looking for a dividend, maybe you want to get it closer to the trend line than up at the top of its range.
Wolf, very nice chart. If it ends the week like this,
I like this one.
Hello, you do. You like this one? Okay.
Yep.
Well, you like it. I like it. I like the chart. Why do you like the story so much?
I think, if you look at what NPL has done, and the market's really said, yes, we like this space. NHF came out with a good result. It was a mixed result. So they had actually an NPAT went lower because of the investments, So it's funny how a company that does insurance is very dependent on how they invest their money, right? Because the premiums that they receive from customers, they have to invest it somehow. And if they don't do it well, there's a problem. You can see net profit down after tax of 133.8 million. But if they invested well, then you're going to get a turbocharged performance. So I think if they can fix that up and things turn around, I think this is going to go very, very well. It is one of the better insurers, private health insurance out there. So Dave, I'm liking this. I think this could be very, very good. I think this could actually go better than NPL, to be honest.
Well, NPL sort of had that move, hasn't it?
This one hasn't.
And I suppose again, this would be very stable,
You think so, wouldn't you? And the thing is, what you got to probably take it as a 12-month play, not a overnight type stuff. Because like I said, you need to see the performance over the next 12 months, how they perform.
So happy enough to sort of put this one on?
Yeah, I think so. I think this is good enough for me. And you can see the markets are thinking roughly the same. There's definitely a lot of promise in that result.
And okay, you've got this growth, Wolf, and you've got a sort of a 3% dividend. So okay, thank you for that. APA. What's going on there, Wolf?
Steady as she goes. It's a boring infrastructure play. It's all about dividends.
Okay, we got NHC. Had a bull terror of a report. Most probably actually, Wolf, to be honest, even if it stays like that for this week, a good chance it can go on with it.
Yeah. Look, I can't, like we talked right at the beginning, we just can't see the war ending in Russia and Ukraine anytime soon, which means I'd say elevated levels for coal, gas, oil for some time. So NHC, any other coal player you might have, you should be still fairly confident that you're going to make some money somewhere along the line, as long as you traded well and you've done the CTM.
NVA, just struggling technically, Wolf. It needs to do a little bit more. But what do you make?
Nice big hits. But this one's, the market's not convinced with it. It's in overseas. I think it's in Alaska, I believe, or Canada. I can't remember which one, but it's not a good jurisdiction, but just so far away from Australia, Dave, sometimes it gets lost. But it's not, look, pretty good hit.
SMI.
Mm-hmm. New Zealand, they had another result. I think they using the old hole, so they are just going back to the same well of just having a look at it again, expanding it, and releasing more results from that hole. Again, pretty good. However, New Zealand, very, very risky New Zealand.
Wait, you're so poor old Kiwis.
Oh, those Kiwis are just unpredictable.
I don't know. Most companies those Kiwis run, they do it brilliantly.
Yeah, only if they come to Australia.
Mate, you can't beat them with a rugby.
Just wait till I get the comments from the Kiwis going, what are you talking about?
Well, I'll tell you what, they can play rugby, can't they? Now, what do you make of New Energy? This is a renewables company. They've sold that. But the story's over because they just gone and sold all their assets.
Funny enough, I had a question, I think on ATA last week about, can you have a look at new solar energy, right, as a renewable, because we've really emphasized and pushed hard for the renewables there. So I said, okay, I'm going to have a look at it. Well, today they come out with a announcement that it's pretty much all over. I mean, they're selling all the assets in the US, winding that company down and really delisting. But they sold the assets very, very well. I think, Dave, if I'm right here, let me just have a look at the announcement. Actually, bring out the announcement. You can see for yourself. Come on, let's have a look at it, and everyone can see the price they've got, and I'll tell you what they're actually trading on, and it makes sense what actually has happened here. So bring it up for everyone. So the market cap of New is 285 million, right? And they sold the whole company post valuation, disposal fee payable to investment, 322 million. So that's actually more than the actual market cap. So that should go up because they're going to give it all back in initial return of capital back to the shareholders. So 82 cents is going to go back to the shareholders. What are they going to do with the rest of them, right? Further 13 to 16 cents, I think they're talking about here, right? That's going to take it up to about 98 cents. We'll see. I think what he just
they won't have any assets left.
No, I just
so basically they're just going to have a value of the shell.
Yeah, pretty much. So
and they're putting that value of the shell at about 5-6 million. Is that right?
Well, I don't know. I mean, look, the whole thing, the whole cash they're going to have are going to be roughly worth about 98 cents, right? So you'd expect with time that the share price probably should go up there somewhere close to that sort of price.
Right. Okay. Well,
but I think what the thing is, right? Don't worry about it. It's the fact for me is, don't worry about what actually just happened here. It is the fact the renewables is hot. You can sell your business, or there's a lot of interest out of companies that are acquiring that sort of stuff for very good prices, as you can see. That's what it means.
All right. Well, for this, on that note, again, renewables.
Yep.
The theory that in the future it's a place to be. Certainly some interesting,
right there.
Yeah, some interesting stories. Some obviously BSE, a high risk dividend play, well worth having a look at. NSR, a stable dividend play. DRE could triple from here. Yep. Very difficult because, like, again, it's a sort of stock that if it came off could come back a little bit.
Venture capital raising, say at 8 cents, it could come back there, right?
Definitely. And apart from that, Wolf, a pretty ugly day so far in the markets.
Yeah, it wasn't great it wasn't a great lead from America on Friday with, I think, Nasdaq down 2%. So yeah, look, not a great start to the week. Hopefully it will get better a little bit towards the end of the week. But like you said, I think there's always the danger of us having a pretty bad September coming up because we had a pretty good run for 2 months. So we could see a bit of selling. All
right. On that note, Wolfie, always absolutely brilliant. Thank you very much. And you're enjoying your time all alone, aren't you?
Yes. Unfortunately, Natalie's left me, gone to Europe. But I'm going to stay in 2 weeks.
How good for Wolf. You can watch what TV you want, and
I know I can eat whatever I want. I can spread myself out the whole bed. It's just brilliant.
All right, see you, Wolfie. Take care, mate. Bye-bye.
Bye.
Bye.